There are so many investment methods out there. There's day trading, swing trading, meme crypto, stock picking, scalping, option trading, real estate flipping, forex. I mean, it's no wonder why you're overwhelmed. Maybe you've dabbled in some of these. Maybe you're stuck, wondering where to even begin. But here's the thing, you don't need to master any of them to build wealth. In this video, I'm breaking down exactly how I will start investing in 2025 if I were a complete beginner. No complicated charts, no guesswork, just 3 powerful Vanguard ETFs that can set you up for financial success. Oh wait, stick around till the end because the last ETF I'm revealing, it could turn just $500 a month into a jaw-dropping $14 million. First up, Vanguard S&P 500 ETF, ticker symbol VOO. This ETF tracks the performance of the top 500 most valuable US companies like Amazon, Alphabet, and Meta platforms. Investing in VOO is like betting on the entire US economy. No stock picking, no stress, no headache. Just instant diversification across tech, healthcare, consumer staples, you name it. Breaking down the numbers, VOO has a 0.03 expense ratio, 1.2% dividend yield, and an impressive average annual return of 13.1%. If you invest just $500 a month into VOO, fast forward 10 years, that's $122,746. And in 30 years, a jaw-dropping $2,236,686. But if you are thinking that's impressive, wait till you see the last ETF. That's on another level. Second on the list, Vanguard High Dividend Yield ETF, ticker symbol VYM. This ETF is like a money printer that pays yield. It holds solid dividend paying companies like JP Morgan Chase, ExxonMobil, and Johnson & Johnson. It's stable, reliable, and built for passive income. With VYM, you also gain instant diversification across all sectors, reducing overall risk. Breaking down the numbers, VYM has a 0.06% expense ratio, 2.7% dividend yield, and an impressive average annual return of 9.8%. A $500 monthly investment in VYM, fast forward 10 years, that's $101,258. And in 30 years, a whopping $1,083,143. If you are finding this helpful so far, smash the subscribe button now so you never miss out on future strategies to grow your wealth. Plus, it really supports the channel and helps me continue creating awesome content just for you. And finally, the one ETF that could change your life, the Vanguard Information Technology ETF, ticker symbol VGT. This ETF is a concentrated tech powerhouse holding Apple, Nvidia, Microsoft, and more. If you believe tech is the future, this ETF is your golden ticket to riches. Breaking down the numbers, VGT has a 0.1% expense ratio, 0.6% dividend yield, and a mind-blowing average annual return of 20.8%. If you invest just $500 a month in VGT, fast forward 10 years, that's $197,974. And in 30 years, an insane $13,994,988. That's right, nearly $14 million. VGT isn't just an investment, it's your ticket to financial freedom. So now that we've got our 3 ETFs covered, VOO, VYM, and VGT, how should you divide your money? The simple way, split it 33.3% each. Or if you want to tweak it, here's what to consider. VYM has a beta of 0.77, is least risky and good for stability. VOO has a beta of 1, balanced and the safe middle ground. And VGT, the wildcard, has a beta of 1.27, huge upside, but also the most volatile. If you are young, earning well, and have solid job security, consider going heavier on VGT for maximum growth. But if you are closer to retirement, lead towards VYM for stable dividends. There's no right answer, just what fits your goal. Now, a question I get asked a lot: should you wait for a market dip? No! These 3 ETF portfolio strategy relies on dollar cost averaging, meaning markets go up, you buy. Markets goes down, cry a bit, then buy more. Over the long haul, this strategy beats even the returns of God. Don't believe me? Watch my video where I deep dive into the comparison between buy the dip versus dollar cost averaging. Link in the description below. But you might be thinking, if this strategy is so simple, why isn't everyone doing it? And that's a great question. Despite this strategy being so simple and effective, here's 3 key reasons why most people fail. Firstly, the lack of financial education. Most people aren't taught about investing, budgeting, or wealth building in school. Instead, they learn how to be employees, not investors. The mindset of save money in banks and avoid risk is deeply ingrained. Without basic financial literacy, most people simply don't know where to even start. Secondly, fear and paralysis. Even when people learn about investing, they get scared. Fear of losing money, fear of making mistakes, and fear that they don't know enough. So they procrastinate and wait for the perfect time to invest, which of course never comes. Meanwhile, opportunities pass, time slips away, and their money sits idling in the bank, losing value to inflation. And the biggest reason of all, not starting early enough. This one hurts the most. Compound interest works best when you start early, but many people delay investing until their 40s or even 50s, thinking they have plenty of time, which of course is completely wrong. Let's assume you're 35 years old now and consistently contribute $500 per month into your investments, and you have a healthy 10% market return. Guess what? By the time you hit 65, you got a cool $1.1 million. On the other hand, if you start at a much later age of 45, even if you double your investments, investing $1,000 per month, by age 65, you will only have $380,000. And that's the brutal reality of investing early versus investing late. The longer you wait, the harder it becomes to catch up. So avoid these 3 mistakes and start investing with this simple 3 Vanguard ETF strategy today. Drop a comment below. If you had $500 today, which ETF would you pick? I'd love to hear your thoughts. If you found this video helpful, smash the like button, subscribe, and turn on the notifications so you never miss out on future wealth building strategies. Thanks for watching, and I will see you in the next video.